Today, we're jumping right into Apple's latest numbers.
Yep, the second fiscal quarter for 2025. We've got the earnings release and the financial statements.
Right, ending March 29th, we've gone through them to pull out what really matters for you.
Uh-huh. The goal is to understand how the company's actually performing, beyond just the headlines.
What are the trends, the challenges, the whole picture?
Exactly. And my first impression, well, they beat expectations overall, but there are definitely areas worth a closer look.
Like services, and tariffs seem to be a big topic too.
Definitely. Services growth is interesting, and tariffs are clearly a major factor they're navigating right now.
Okay, let's get into it. The headline numbers first. What did we see?
Well, earnings per share, EPS, came in at $1.65.
Which was slightly better than the estimate, right?
Yeah.
$1.63.
That's right. And revenue was $95.4 billion.
Also beating the forecast, which is around $94.66 billion.
So yeah, a positive surprise on both fronts to kick things off. It shows some solid core strength.
Good start. But as you said, the story gets more complex when you break it down by division.
It really does. You see different dynamics playing out across their product lines.
Okay, so where did they really shine? iPhone, I assume.
iPhone definitely delivered. Pulled in $46.84 billion.
Which beat the $45.84 billion estimate. Still the powerhouse.
Absolutely.
Wow.
But it wasn't just iPhone. Mac did well, too.
Oh, yeah. What were the Mac numbers?
$7.95 billion in revenue. That beat the estimate of $7.77 billion. Pretty strong growth there.
Nice. And iPad.
iPad also had a good quarter, $6.4 billion in revenue, beating the $6.2 billion expectation. That's a significant jump year over year for iPad.
Wow. Okay. So strong hardware sales across the board, mostly. Those March refreshes probably helped Mac and iPad.
Very likely, yeah. Timing was good there. But then you get to wearables, home, and accessories.
Ah, okay. What happened there?
Well, that division came in a bit short, $7.52 billion.
And the estimate was closer to $7.95 billion.
Exactly. And maybe more importantly, it was down about 5% compared to the same quarter last year.
Ooh, a decline. Any reason given?
They mentioned the Vision Pro launch, which happened in the prior year's quarter, as part of the reason for that tough comparison.
Right, so comparing against a quarter with a major new product launch, that makes sense, I guess. Still, a dip is a dip.
It is. And it leads us to services, which is, really critical for their growth story.
Okay, services. How did that look? Still growing strong.
Growing, yes. $26.65 billion in revenue. That's up 11.65% year over year.
But, I sense a but.
Well, it slightly missed the estimate of $26.70 billion. Not by much, but still a miss.
Okay, tiny miss. But the growth rate itself...
That's the key point. The 11.65% growth, while good, is actually a slowdown from the 14.2% growth they saw in the same quarter last year.
Ah, deceleration. That feels notable. Services has been such a rocket ship for them.
It really has. And seeing that growth rate moderate, well, it raises questions. It's getting harder to maintain that really high pace.
Yeah. Are we hitting some saturation maybe? Or just maturing markets for things like music or iCloud?
It could be a combination of factors.
Yeah.
But it certainly puts more focus on, what's next for services, new offerings, expanding existing ones.
Definitely something to watch. Okay, let's switch gears. You mentioned tariffs. Sounds like that was prominent.
Very much so. Tim Cook addressed it directly.
What did he say?
He basically put a number on it. They expect tariffs to increase their costs by about $900 million.
Wow, $900 million. Just in the current quarter, the June quarter.
That's in the June quarter, yeah.
Yeah.
That's a significant hit.
And underscores the real financial impact of these trade policies, doesn't it?
Absolutely. And he was also cautious about predicting beyond June, citing the uncertainty around tariffs.
So they're feeling it and they're reacting. How are they adapting? Supply chain shifts.
Yes, exactly. Cook detailed some of that. He mentioned that roughly half the iPhones for the U.S. market, they're now sourced from India.
Half. That's a big shift.
It is. And he added that most other products heading to the U.S. are coming from Vietnam.
Moving away from China, at least for the U.S. market, to avoid those higher tariffs.
It seems to be the strategy. Though he did clarify that for other countries, the vast majority of products are still made in China.
So it's a targeted adjustment based on where the tariff pressures are highest? Makes sense.
Right. And he also made a point of mentioning domestic sourcing, specifically for chips in iPhones.
Oh, yeah. What was the detail there?
Said they're buying 19 billion chips from U.S. suppliers this year, sort of highlighting their U.S. investment, too.
Interesting. And did they see people rushing to buy before potential tariff impacts, that pull-forward effect?
Cook said no. He stated pretty clearly they didn't see any significant pull forward of demand into the March quarter because of tariff worries.
Okay, so consumers weren't panic buying, at least not in a big way.
Apparently not.
Yeah.
Now, looking ahead, their guidance for this current June quarter,
What are they expecting?
they're projecting revenue growth in the low to mid-single digits range year over year.
Okay, low to mid single digits. And last year's June quarter was $85.78 billion, I think. So we can kind of estimate the range.
Exactly. And on gross margin, they're guiding to around 46% at the midpoint.
46%. Now, you mentioned that $900 million tariff cost. Does this guidance include that?
Yes, that 46% margin guidance factors in those expected tariff costs.
And how does that compare to what analysts were thinking?
It seems analysts were hoping for a slightly higher margin figure, so the tariffs are definitely squeezing that profitability outlook a bit.
Right, shows the pressure they're under, absorb the cost and hit margins or pass it on and potentially impact demand.
It's that classic balancing act.
Okay, what about shareholder returns? Buybacks, dividends?
Still strong. The board authorized up to $100 billion in share repurchases for this quarter.
$100 billion? That's huge, though slightly less than last year, wasn't it?
Just slightly, yeah. Last year was a $110 billion authorization around this time. Still, a massive buyback program.
And dividends?
They're increasing the dividend by 4%, up to 26 cents per share.
And they committed to keep raising it annually, right?
That's the plan they reiterated.
Yeah.
Yes, consistent annual increases.
So, returning cash to shareholders remains a priority. And how did the bottom line look for the quarter just reported? Net income.
Net income was up year over year, $24.78 billion, which translates to that $1.65 per share we mentioned earlier.
Compared to about $23.6 billion or $1.53 per share last year. So, profit growth despite the headwinds.
Exactly. And the actual gross margin for Q2 came in right at 47.1%, matching estimates. So performance in the quarter itself was solid on margins.
Good. Let's look geographically for a moment. How did sales break down by region?
Americas looked pretty strong, nearly 8% growth there.
Okay. Solid performance in their biggest market. What about Greater China? That's always a key one.
Right. Greater China, which includes Taiwan and Hong Kong, saw sales down slightly year over year, came in at $16 billion.
Done slightly. But wasn't there some nuance there from Cook?
Yes, he pointed out that quarter-over-quarter sales were actually accelerating.
Okay.
And he also said that if you exclude the impact of foreign currency exchange rates, sales would have been basically flat year over year.
Ah, the currency impact. So underlying demand might be stabilizing or even improving a bit.
That seems to be the suggestion, yes. The FX headwinds are definitely muddying the waters on the reported numbers.
And the financial statements give even more detail, right? Breaking down sales by product and region over longer periods.
They do. You can really dig into the contributions, see how dominant the Americas and iPhones still are across the board. Useful context.
Okay, nearly wrapped up. Any other key strategic points we should touch on?
Well, there was the news about some AI features.
Right, the ones announced last summer. What's the update?
They've been delayed, pushed back to sometime in the coming year, with the phrasing.
A delay on AI. Could that affect how people see the new iPhones?
It's possible. Some analysts think it might make the latest models seem a bit less cutting edge compared to competitors who are really pushing AI right now.
Yeah, AI is such a buzzword. Delaying features might give rivals a bit of an edge, perception-wise at least.
It could. But, Cook framed it as making thoughtful and deliberate decisions, focusing on long-term innovation, not rushing things out.
The classic Apple approach, perhaps. Get it right rather than get it first.
That seems to be the message, yes.
Okay, so let's try and synthesize this. Apple beat the main expectations for Q2 2025.
Yep. Revenue and EPS were better than predicted.
Driven by strong iPhone, Mac, and iPad sales. Hardware looking good, mostly.
Right. But wearables dipped. And maybe more significantly, services growth slowed down a bit from last year's pace, even though it was still positive.
And the big shadow is tariffs, right. A $900 million cost impact expected this quarter.
Definitely. And they're actively shifting supply chains, especially for the U.S. market, moving more production to India and Vietnam to manage that.
They're still returning a lot of cash to shareholders. Buybacks and dividends remain robust.
And financially, the company looks healthy. Profit grew year over year. China sales need watching, but might be stabilizing underneath the currency effects.
So the key takeaways seem to be core hardware resilience, a watchful eye needed on services growth, and the very real tangible impact of global trade and tariffs on their strategy and costs.
That sums it up nicely, I think. The hardware strength is still there, but the services narrative and the external tariff pressures are probably the most important things to track going forward.
All right, so here's something for you to think about until next time. Apple's built on this incredibly complex global supply chain.
Mm-hmm.
With trade becoming more complex and uncertain, how might that continue to force changes? Not just where they build things, but maybe even how they design products or how they price them.
That's a huge question. The long-term strategic implications are massive.
And add to that the delayed AI features.
Hmm.
In a tech world obsessed with AI right now, what could that delay mean for their competitive edge, even if they eventually deliver something great?
Yeah, how does that play out in the market perception battle? Lots to ponder.
Definite. Some food for thought. We'll leave it there for this deep dive.